Alright, so trend lines. We'll start with VTC or Vertcoin because this coin has a beautiful chart right now and there's a lot of very interesting things going on, stuff I wanted to point out. And it also teaches you a lot about trend lines and market cycles and kind of how they play out as well. So I just figured it was generally a good one to use in this video. So yeah, we'll start by doing a little TA on it, kind of pointing out its trend lines, the ones that it breaks out of, its market cycle in general, the Elliott waves in it, the inverse head and shoulders. There's a bunch of juicy stuff in this one, honestly. So we'll go over most all of it here, but we'll start with the trend line because this is really where Vertcoin started its first mini little market cycle down here during March and April. So really during the first bubble when everything was pumping and everything was going straight up on Poloniex, literally everything was going up at the time. So that was during that period of time here in Vertcoin that it made this nice market cycle on the upside, played these waves out with the whole market, which would be like this, where you have a 1 and a 2 and a 3, 4 and 5. And then here's the trend line of that first market cycle. This very, very low trend line right here. Like that. So as you can see, in this first market cycle, we had a pump, a fall back to the trend line, a pump, a fall back to the trend line, and then that final wave all the way up to the top, and then the bigger ABC retracement. And in this retracement, you can calculate the waves. You get your A, you pull this down to the first low, it comes out of this rising wedge, and then it falls back down to the C. So that was the wave set that played out here, as you can see. And in this wave set, it's very interesting actually. You find that, let me pull up this trend line just a little bit steeper here so I can draw around this. You see that there's a rising wedge right here, and that was part of the leg, the A, B, and then the C leg. So that was part of the ABC retracement here. As you can see, you have this big A, which is that. The A leg is actually the leg that has that wedge, and then that B leg is the rising wedge, and then you have the C back down to the bottom there. So as you can see, there's lots of different patterns playing out in this market, very common ones actually, and ones that we see generally in most cryptocurrency markets that was playing out here. But this is why you have to understand Elliott waves, because if you understand Elliott waves, then you can get out of this market near the top, because you understand that a bigger retracement was coming out of this where it was going to fall below the trend line, right? And if you would have bought anywhere down here, if you bought down here, then you would barely come out in profit if you get stopped out at the trend line. So that's why you have to know the waves so that you can put your stop loss near the top and then maybe get stopped out like right here at 37K or something, so that you get like a large gain off of that setup. Now, what's going on with its cycles right now? Well, we've actually just barely started a new market cycle here. So it did break bullish out of this, so we can look and we can find descending resistance. So this is a trend line where it's getting rejected along right here. You can just draw this line. As you can see, the market, after it hit the top, the peak of the 5 wave, it created this new descending resistance channel, and then that's where the waves played out in the C as they got rejected off of that descending resistance on the way down. And then it broke out of that descending resistance right here, down at this low. See, the coin actually broke that descending resistance, fell back onto the trend line. See that red day? That's where I would have bought this coin. I actually didn't spot this one when it was doing the cycle, otherwise I would have. But that's where I would have bought this coin, because of that red day. It always has a red day after a breakout, and that's where you want to enter. And then you can see we have a new wave set come in, 1, 2, and then we still haven't had this 3 wave, but in my eyes we will have that 3 wave go up to the top of the 5. So it should look something like this, where we'll have a 1, 2, 3, 4, and then it falls to the trend line, and the 5 goes up to the previous high. So you'd have a trend line along here. So it was buy at the trend line recently here with the 4. So I actually did enter on this coin right here, so I have some VTC now. So yeah, I'll be looking to take profits near the previous highs right here, and then I'll wait for an ABC retracement and then get back in on this, because after this I suspect it to kind of continue going upwards like this. But that's how you can use trend lines and Elliott waves together to find the market cycles, where they begin. As you can see, this was all consolidation, so this was just literally sideways movement. That's how you identify consolidation, as if it's just generally moving sideways all along this area. That's all a consolidation period right here. And then it came out of this consolidation, then you had an impulsive leg up, so I indicate that in my trading plan as a drastic breakout. That's what I look for in the first wave, is that quote quote drastic breakout. So we did have that, and then you buy at the 2 and the 4. So you buy on the trend line here. VTC you would have bought at like 7,800, and then you would have bought again at around 13K, and then you would have been selling out of the top here. And this is why I do double stack my Fibonacci, because if you go from the low to the high here, and then you take this and you clone your Fibonacci. So if you go to from the 1 and then the 2 and the 3, so if you capture the first little wave sets and then you stack your Fibonacci, you can see that the 236 is always where this chart comes up and then rejects out of that high. So that's how I calculate those targets. That's why I use the stacked fibs with the Elliott waves, is because you can use the 236 as a projected target, calculating the low of the first wave set and then the high of the third wave set, the 3 wave. So that's how you go from that low to the high with the fibs, double stack them, and then you can get that target up near the top. Sometimes it's smart to go a little bit below, or at least drag your stop loss up to like right here, because the market might overshoot or undershoot a little bit. So you want to give yourself a stop loss as leeway, because if you have a stop loss and you're just slowly trailing it up as the coin increases in value, you bring your stop loss higher and higher and higher, and then when it turns back around you get stopped out near the top, and it goes for this bigger retracement back down. So now I am calculating this target, because we've already had one market cycle play out and we're starting another one. I'm calculating the target with the previous high, because markets like to have resistance, so it's likely that at this point we reject again. So that's why I'm taking profits near this area again at 48K, which would be, let's see, how much percentage from my entry. Yeah, so I'll be making around 96% on this one. So I should nearly double my money on that trade. But that's just kind of, that's basically the basics of how I use trend lines, Elliott waves, and the breakouts and descending resistance to like determine when a new market cycle starts, like right here where we had this breakout in this descending resistance line and then it fell back onto the trend line. That was an indicator, and this huge volume spike comes in as well. That was an indication that this coin was headed for another wave cycle. And sure enough, we have this 1, 2, 3, 4, 5. That 5 leg is coming. So it's very, very intriguing to see these markets play out like this, because there's a lot of consistency if you know what to look for. And it makes you realize that humans think the same every single time, and when you know how to identify where they start thinking a certain way and where they stopped thinking a certain way, that's really, the trick of trading, is finding that shift in what people think. So yeah, but overall Vertcoin after this, as long as we can hold on this lower trend line here, when we come back up out, it'll probably fall all the way back down to where it's at right now, somewhere here. I don't suspect it to go below this point. So you can actually use Elliott waves to calculate what this might do in the future too, because generally these wave sets look the same. So you'd have a 1, a 2, and then it would come out like this, and then you'd fall back nearly to the bottom, probably along this trend line, and then you'd come back out. So it would be like this lowest trend line would be the one that you'd be watching here for it to land onto. So let me clear up some of this other stuff so that you can only see the wave count. So this is one of those videos that you'll probably want to watch over and over and over again, because the stuff that's taught in this is extremely useful, and it's basically how you determine and find good setups in cryptocurrency and really any market. Like silver just started a new market cycle based on the same parameters, and I'll show you in just a second. So yeah, that's why we'd expect this to have a move somewhat like this, where this has like an ABC back onto its trend line and then finishes its move back up to the top here. We'll probably have another impulsive leg up out, and then that will be the top of the 3. So it looks something like this. Let me pull this over. Usually takes longer than you would expect it to as well when you're calculating these. And then the other rule about Elliott waves is the 2 cannot be higher than the 4, the 3 has to be higher than the 1, the 5 has to be higher than all of them, and then the same with the ABC. The A has to be below the B has to be above the A, and the C has to be below all of them. So that's like a rule of the Elliott waves, and so when this 4 comes back down all the way to the trend line, it can't be below this 2 of the bigger market cycle, because I'm drawing the bigger waves, because all of these waves like play out waves within waves. And then you'd see the bigger retracement here near the top, where you'd have like this fall back. And this is also why markets make shapes like cup and handles and inverse head and shoulders, is because of Elliott waves. You can see that cup and handle would come into the market and it would go on the upside here. There's also an inverse head and shoulders down here because of an ABC and then a 1, 2, 3. So it's the Elliott waves that are actually painting those patterns in the market. It's the emotional cycles that are painting the inverse head and shoulders. It paints the bull flags, the little rising wedges. All of those shapes and patterns are because of the emotional market cycle that humans think every single time a market goes a certain way. And then, you'd have another cycle come back up here near the top where you have those 1, 2, 3, 4, 5. Maybe another type of, cup and handle ABC. 1, 2, 3. It would probably fall back to a lower trend line. People would think the market's dead. This is why markets always become dead and then go up when nobody expects them to as well, is because of the waves. And then you have the 1, 2, 3 back up out of this, and then a bigger retracement out of all of this. So what you'd expect in Vertcoin, and this is all just speculation, as you can see, because this would be a wave set that played out to 2019. If we do continue going bullish, we will see this happen somewhat like this in Vertcoin. Obviously all the wave sets get distorted a little bit, so it's not going to be perfect every time, but it will follow the rules of Elliott waves, which is the 5 above all of them and then the C below all of them on the retracement. So it will be the 1, 2, 3, 4, 5. It'll follow those rules of Elliott's, and then when you get here to the top, you'll have a bigger retracement, probably all the way back down to the lowest trend line, or somewhere around here. It'll have a big retracement after that, because the market will be very blown out of proportion. But that's Elliott waves, trend lines, breakouts, and market cycles. It's a lot to take in at the start probably, but since you guys are lifetime members, I know that you've researched a lot of different things already, so you probably have a pretty good hang on trading by now, or at least you're starting to get the hang of it. And if you're new to this as well, just watch this video over and over. You'll learn a lot from it. It's probably one of the most important videos in the entire course, because of these Elliott waves and the market cycles and trending. It just explains basically everything about trading. Any pattern, any movement, all of that can be explained inside of these tools and these resources. And then also, you've got the Fibonacci you can use to calculate targets. See, this is why I go from the low of the 1 to 3. So I go from the low of the first to the 3 wave, and then I clone Fibonacci. And when you copy them and stack them, generally speaking, the 2, 3, 6 ends up being a good spot to sell. So in this area right here would be a good spot to sell. So the 5 wave would probably come up to around here. And that would be if VTC continues to play bullish market cycles. If it continues to play out bullish here and play this whole wave, then we could see like a 0.00139 Bitcoin VTC near 2019 based on, using, oops, these are a little bit off. So yeah, you stack these on top of each other, going from the 1 to 3. So from the low of the market cycle to the high of the 3, just like I did back there at the start of this lifetime video to calculate that 5th wave, that last move in the market and where it might stop. I used that .236 Fibonacci. So yeah, that's basically what I wanted to go over, along with these trend lines, Elliott waves, and the market cycles. So we will switch over to my other camera.